Hey everyone, welcome back. I'm genuinely glad you're here because last week was one of those quiet weeks where the market didn't scream, but it definitely rewarded the people who showed up prepared, stayed patient, and knew what they were looking at. Before we zoom out, I want to give real credit to our pro members. While most folks were still watching for the sidelines, they were already positioned. We had MLEC run more than 56%, SHIB jump over 47%, ALLO up more than 16%, OPN up just over 16%, and CCJ delivering an 11% move. When you zoom out even further, across 180 predictions just last week, the crowd wisdom hit nearly 69% accuracy. Across more than 6,000 total predictions, we are sitting a little north of 72%. That's not a lucky streak, that's consistency, and that's the whole point of this process. Now, let me ground us for a second. What I'm sharing here is insight, perspective, and education based on aggregated professional trader intelligence. It's not personal financial advice. I don't know your portfolio, your time horizon, or how you sleep at night when positions move against you. Markets involve risk, losses are part of the game, and you should always make decisions that fit your situation or talk with a qualified professional. My goal is simple, help you think more clearly, not tell you what to do. Big picture, the market is a lot more resilient than the headlines would have you believe. The S&P 500 continues to lean neutral to bullish. The Nasdaq feels more like a wait-and-see trade as we head into major earnings. The Dow is dealing with some pressure from tariffs and geopolitics, and quietly, the Russell 2000 has been one of the stronger spots as money rotates into small caps. Volatility is elevated, but it's contained. Gold and crude are catching a bid from geopolitical tension, and most importantly, we're seeing rotation, not a full-on risk-off move. That tells me this is still a market that rewards selectivity, not fear. This week is loaded with catalysts. Hundreds of companies are reporting across almost every sector, with the calendar really heating up around February 25 and 26. NVIDIA is the headline event, no question, but we're also watching Salesforce, Intuit, Monster Beverage, Cheniere, and TJX. On the macro side, the Fed is holding rates steady. CPI has cooled to about 2.4%, GDP has slowed to roughly 1.4%, and a Supreme Court tariff ruling has taken a bit of pressure off inflation. Bonds are cautious, the dollar steady, gold keeps pushing higher, and there are no market holidays, so liquidity is fully in play. From a technical standpoint, the major indexes are consolidating just under highs. The S&P 500 is holding support around 6,860 and pressing up toward 7,000. The Nasdaq 100 is shaping into a bullish pennant. The Dow continues its slow, steady grind higher. Volume profiles show heavy accumulation near support, which tells me institutions haven't left. They're just being selective. Now let's get into the names we're actually watching this week, because this is where preparation really pays off. Starting in big tech, Alphabet, ticker GOOG, is trading around 314. The bias here is long, with a solid 62% conviction behind it. Traders are really focused on that low 300s area. As long as Google can stay above roughly 310, the door opens to 325 and potentially 330. Lose 310 and you step aside, with a deeper safety net closer to 296. This isn't about swinging for the fences, it's about respecting a well-defined bounce zone that smart money is watching. Tesla, ticker TSLA, is almost the opposite setup. Trading near 411, the pressure still leans lower with about 55% confidence. Traders keep drawing a line in the sand between 416 and 420, and Tesla just hasn't been able to get through it. As long as it stays below that ceiling, 400 looks like a magnet, and below that, 385 comes into view. If it reclaims 416 and holds, that short thesis is done, with 425 being the harding validation. Berkshire Hathaway, ticker BRKA, is more about durability than excitement. It's trading near 746,000 with about 58% confidence to the upside. Traders like how it's holding above 740,000 and compressing just under resistance. A slow grind towards 752,000 and even 760,000 makes sense as long as that flow holds. This is a park your capital trade, not a race. Sentiment is elevated. Professional sentiment shows strong gains across the major indexes, and the Fear and Greed index is hovering around 70. That's greed. It doesn't mean hit the sell button on everything, but it does mean contrarian risk is rising and discipline matters more than ever. Breadth is still healthy, but extremes demand respect. Options markets are also flashing a bit of caution. SPY, QQQ, and IWM are all showing near-term bearish bias with elevated put activity. Translation: even if your core view is neutral to bullish, hedging isn't optional here. So how does this all come together for the week ahead? I remain neutral to bullish on the S&P 500, bullish on the Russell 2000, and cautious on the Nasdaq until NVIDIA reports. Swing traders should focus on small caps, commodities, and select AI infrastructure names. Intraday traders need to respect breakout levels and volume. Position sizing matters, stops matter, and when sentiment runs hot, hedges are your friend. If you want the exact levels, the confidence calls, the cloud wisdom behind each setup, and real-time updates instead of reacting after the move, that's exactly what Crowd Wisdom Trading Pro is built for. We've already saved you dozens of hours by analyzing hundreds of videos and hundreds of thousands of words from top traders, and turning that into something you can actually use. If this helped you, take the next step. Join the Pro community, get the edge, and trade with the crowd instead of against it. I'll see you on the inside, and I'll see you next week.